share with you a very different perspective. You know, the perspective from this side of the table. What do we love to hear? Right? I mean, and when I say VCs, I really don't mean all VCs, and I know everything that VCs want to hear. But typically, what do venture capital investors like to hear? Now, you know, in any conversation, there are always two people. There is somebody who is speaking, and there's somebody else who's listening, right? When you go to meet venture capital guys, right, you are the person who's speaking. Whenever you're raising capital, you're speaking. Now, when you speak, what you essentially are doing, you know, the end goal is to make the investor understand how very appropriate and awesome your business is. Only then he'll give you money, right? So how do you do that? Typically what we do is we do storytelling. As a founder, you're essentially coming and narrating your story to us, the investors. And you're trying to excite the investor into understanding your story, understanding your journey, all the difficulties, all the awesomeness that lies on the other side once you have the money from the VCs, right? So what I thought I'll do here today is tell you what do we like to hear. But before I tell you what we like to hear, since many of you are founders, can I get some opinions from you as to what do you think VCs like to hear? This is a candid session. It is not going to be broadcasted anywhere. So feel free to tell me, what do you think venture capital guys like to hear? You are walking into a meeting with a venture capital guy. What do you think he likes to hear? Gentlemen there.
Under the sun. All the positive things under the sun.
All the positive things. Nothing negative. Okay, yes. Yeah. Yeah, be candid. Just
Scalability and profit.
scalability and profit. It's good to hear the word profit. Till about 2 years, 3 years back, nobody would say profit with scalability. Yes.
So, like a burning problem in a large market, and some of the nice techie words like AI and all of those stuff. And then I think VCs also like to hear that what are the pitfalls, but they also want an answer that how you are the right team that who could overcome those pitfalls, that you should have some plan in place.
Very interesting. So you have made pitches from experience. Very good. How about this side? Yes.
We have done the correct homework.
Sorry?
That we have done the homework correctly.
Absolutely. You've done the homework correctly. Absolutely. You have to give us a story to make us understand that you have done your homework and you really understand the problem.
Basic traction and the metrics.
Very good. Thank you for mentioning that. Basic traction and the metrics. ये metrics क्या है ये किसी को नहीं मालूम है. Nobody knows what the metrics is, because if you come to a venture capital guy, I've had this experience by the way, you will say these are the metrics I track, and the VC will tell you no, but not this, you track those, you know, and then you go to another VC, he'll tell not those, you know, these. So, you know, the holy grail, we don't know what the holy grail is, but a very good traction and metrics.
Product market fit.
PMF, product market fit. We hear so much about it, right? And I think it's an essential part of the conversation that you have to have with the venture capital guy. Now, let me ask you another question. When you enter a VC's office, what is really going on in your mind? Is product market fit, traction, metrics, profit, scalability, great. What really are you thinking as you enter that meeting room? I want someone who can be very candid and saying, Abhi, I have to give him the true answer. Shit.
पैसा कैसे निकाले?
Ah, there you go. इससे पैसा कैसे निकालने का? Great. What else? Forget the pitch and forget the story and forget all of that, right? What actually, really are you thinking? And that's true. I agree with you, by the way. By the way, when you're entering our office, we are also thinking something. ये पैसा बनाएगा क्या? There you go. Great. Let me get on to some slides I have. They are only indicators. This is more a conversation between you and me, and I'm here to tell you how VCs think, what do we like to hear. Not necessarily because that is what you should come and tell us, but essentially this is what we are wanting to understand better. most of the points, I think, some of the points we've already touched upon. So gritty founding teams who are building with focus. Two things. We are looking for founders. We are early stage investors. Venture, by definition, venture means risk, a risky proposition, a risky journey, which essentially means the founders, people who are walking that journey, that risky journey, the new journey, how gritty are they, right? And I would recommend here that you read a book called Grit. How many of you have heard of that book? Grit. That's the name of the book. Grit. Please do read it. Fantastic read. It's got nothing to do with startups, by the way, but it is about grit. So gritty founding teams, these are the kind of founders we want. The founders who never let go. In the startup world, we hear a lot of, this word called pivot. Have you come across this word pivot? How many of you have businesses that have pivoted? Like you started going in one direction and you ended up somewhere else? You guys have some experience, right? The only way you can pivot and succeed is if you are gritty. Grit is determination. How determined are you? See, you're walking on a new journey. There are going to be challenges. Founder understands that. Investor understands that, right? As much as you come and tell me, all the good things and positive things, we do understand there are pitfalls. We want to understand, do you have it in you as a founder to really face the odds? Or will you, leave the problem and say, oh, fuck, this is too big a problem, let me go and do something else. So that grit, that determination, does that exist? And it's not about one founder. As a VC, we will meet all the founders. Most of the time, we'll not only meet the founders, but we'll also meet the top tier team. So you will have 2-3 senior hires, maybe somebody on the tech side, somebody on the business development side, sometimes somebody on the finance side, accounting, finance, IT, etc. So we will try to meet most of these senior folks who really matter to the business to understand whether this whole team is gritty or not. Do they have it in them? And I think somehow, when you just come and tell us positive stories, right, we don't see the grit because we are seeing everything is nice. Right? I mean, imagine this. Put yourself in our shoes, in the investor shoes. As a founder, what do you do all day? You're building your startup. You're taking meetings, you're doing stuff, you're building things, all of that. What do we do as investors the whole day? We meet founders. We try to understand businesses. Which means on an average day, imagine how many stories I'm listening to. Right? And all these years, we've been listening to these stories. Imagine how good investors are, or are supposed to be, at understanding which story has merit and which doesn't. Right? So as much as we talk about storytelling, etc., I think what has to come through in the first few minutes of your meeting, is your grit. It is not your understanding of the space. That's very important, by the way, right? I mean, you have to do your homework. I'm not denying that. But the first few minutes in that meeting have to be focused on you convincing the investor that you are it. You have it in you, you're going to make it. You're confident, big, think big, we'll do it. Why we'll do it will follow. Why do you think you're confident or so confident, right, will follow in the conversation. Then we like focus. I think as investors, we love focus, right? As a founder, one of the, every quality that you have as a founder, which is required as a good founder, also has its own pitfalls, right? For example, as a founder, you have to be very innovative. You have to be very, in Hindi they call it jugaad. I don't know if you're familiar with that term, but you're expected to be jugadu. Where you're expected from 50 rupees, you have to do something worth 200 rupees. Everybody expects that out of you as a startup founder, right? Including your team. Everybody expects that. But the flip side of that is that every time a new idea comes along, right, you will want to look at it, you will like to analyze it. By the time you're not even finished analyzing that and understanding that, somebody else will come along with a new idea. right? See, very important to understand, we are all working in India. In India, everybody has millions of ideas, right? You will have hundreds of ideas, you will have 100 more new ideas, you will have ideas, everybody will have ideas, I have ideas. What we don't have or we lack is the execution capability, right? It's not that we lack, but we don't have in as much in abundance as we have ideas. So what is required, right, is focus. Are you focused? Do you understand that if you have to succeed on a path, you have to be very focused, right? These are things VCs like to hear. Not that you come and you tell us that I have focus. It's that you come and you tell me your story, but from your story, I have to understand that this team has focus. Yeah? Sorry. That's okay. Large TAM promising scalability. You told me about scalability and profits. Scalability, right? We all like to hear large numbers. Why do we like to hear large numbers? If you've understood venture capital industry and venture capital investing, you will realize that our business is something that follows what we call as the PAR law. Are we familiar with the PAR law? Some of you are. Essentially, it means you will make 10 investments, 8 of them may die, but 2 of them have to give you outsized returns. In short, that's the simple, common way of understanding PAR law. So we are in that business, which means of the 10 founders that we are going to give money to, we know, right? We are prepared to see 8 of them fall, right? 8 of them will tumble, fall, fail, they'll just not succeed. But 2 of them have to. Because if those 2 investments do what we are expecting them to do, right, the VC's fund is performing well. Right? We are getting the returns, we are making the returns that we promised we will. Everything is good in our world. As long as 2 of the 10 companies perform. When we are making the investments, we don't know which those 2 companies are. Right? See, it's like parents. If you've ever been parents, which most of you here I don't think are, but some of us are, you will understand that you don't have a special child. You don't have a favorite child. Right? Everybody's equal. But as they grow, then you realize the differences. You can't help but realize it. It becomes very apparent. Right? So similarly in a portfolio. We all want large markets. We all want scalable businesses. And only then do we get, as a VC, great returns. Right? But what determines that? Projections. Remember, when you come to meet us, investors, you really haven't built a large business. There is no scaled up business now. All you have is an idea plus a little bit more. Early stage. Right? You have a co-founder, you have some technology guy, some tech has been built, some little bit client conversations are on, maybe some conversions have happened, maybe not. So it's very early in the life cycle of a business, right? A business is an ever-going concern, as they say, if you ever studied accounts or economics. Now, ever-going concern may, if you've done 1 or 2 years of effort, it's really just the beginning. You're still a startup. Now, at that stage, it's very difficult for you or for us to put a certain number as to how big the business can become. So what we do is we start ascribing probabilities. So we start ascribing probabilities to how big can the business become, which is a function of how big is the potential area. So for example, if you're in a business making, let's say, earrings, right? There's a certain market size that you can reach. But if you expand that same business idea to say, I'm going to make jewelry for women, then you expand it by saying, okay, I'm going to make jewelry for men and women and children. Okay, I'm also going to include watches in that. That's jewelry, right? So you keep expanding your market size. VCs love to hear that, right? And when you're telling us that, please make sure that you understand how you will actualize that TAM, that addressable market, the total market possible. Yeah. I think this is a big problem area, and I'll be very frank and honest here. every founder that I've met, 99% of the founders I've met in my life have a very clear understanding of what they want to do in their mind. In their mind, there's clarity. There is no confusion, right? But when you're asked to put it out there in the world, right, to explain to others what is your business plan, you start talking, you start explaining, you really want to share, you start sharing, but there is no structure to that sharing. Consequently, what happens is a lot of the good things from your point of view, they get lost by the time they reach us, right? Something that is very critical and pivotal to your entire business plan execution sometimes gets missed. As a result, what we think is all that you have are clouds. Vaporware. Some idea somewhere can't be actualized, can't be realized. So I would recommend when you're talking to VCs, please do spend a lot of time talking to other founders, telling them your pitch, not to investors, to other founders. If possible, pitch your idea to successful founders. Somebody who's been there, done that whole track he's walked, right? So when you talk to such people, they will very easily point out not the flaws in your business plan, right? But they'll point out what you have to elaborate on, what you have to skip, what should be your focus. You get a 45 minutes to maybe 60-minute meeting with an investor. Usually, some meetings are shorter, some meetings are longer, whatever. Or on average, you will get 45 to 60 minutes with any venture capital investor. You have to think about how you are going to utilize that 45 to 60 minutes so that it leaves an impression, right? By the way, I am trying to do just that right now. I have 45 minutes to 60 minutes with you. Before I walked in here, I was thinking, now what do I have to share with these people who are going to come and spend time with me? They should have some takeaway. So I have to think what that takeaway has to be. I'm going to talk for 60 minutes. I'm going to talk about 10, 12 slides that I have, all these nice images, concepts. We can have Q&A. We can discuss a lot of things. But what are those one or two key things that I think will be very useful for this audience? Right? I am doing the same. So when you meet the investor, you should do the same. It is your business. If you are asked to talk for 4 hours for your business, I have no doubts that you will. I was outside now meeting all these companies who have stalls. And the founders are as passionate as founders can be. They will come, they will explain to you with a lot of joy and delight in their eyes. लेकिन वो सुबह से 40 बार कर चुका है, right? But doesn't let show. They're so excited about it, right? So that is how you have to be. When you meet investors, you will have that enthusiasm. You will be able to talk a lot, different aspects. You can talk to an investor for 1 hour on technology, 1 hour on business development, 1 hour on product, 1 hour on product market fit, etc. You can do all of that. But you don't have that luxury. You have 45 to 60 minutes to leave an impression. So please do this. When you go into a meeting with an investor, how will you leave that impression? That's the question you have to have. Right? Exit possibilities. Every investor you meet to is going to be asking you, either in the first meeting itself or maybe in one of the follow-on meetings, about exit. Because as an investor, you have to understand, we are investing in companies that are not listed on the stock markets. That IPO has still not been stitched together. There's no IPO yet. So we are not investing in a listed company. We are investing in you, the people. How do we get exit from our investments? Answer is nobody knows, right? But do we have, it's like a business, no? Business plan. How will the business pan out? Nobody knows. But there's a plan. Similarly, when you're talking to an investor, it is music to our ears. As much as when we will keep a very straight face when you're talking about exit, right? But when you're talking about our exit, it's music to our ears. That here comes a founder who really understands my problems of life. not only their problems, but they also understand our problems, right? So have some business plan, which is not just vaporware, which is not just, in the air somewhere, which is something tangible to it, which sounds very realistic, and that will lead to an exit for the investor, right? These are the stories that investors and venture capital investors like us want to hear when you walk into our offices. We obviously want to understand your journey. We all want to understand your background. We want to understand you. We want to understand your team, your plans, how after 5 years you will be a unicorn or 3 years you will be a unicorn. We want to hear all of that. But we also want to hear how you will provide us exit. Like, very important. Self-explanatory. Every investor wants to hear about numbers, performance, traction. Problem is, traction is something, which 99% of the time is always coming. It has never come. It never arrives. It is on its way somewhere. Right? Can you share a plan when you're going to an investor that you think can be actualized? Right? That is the key. Now, I understand the obvious problem that if I'm meeting 10 people in a day, 9 of them come and tell me cloud, stories, plans, unicorns, and then you, last person, come to me and tell me, देखो वो सब नहीं होने वाला है, लेकिन ये होएगा. Right? Now, obviously, I understand the problem that you face, that if I tell him exactly इतना ही होने वाला है, maybe he'll not be interested. Right? And I get it. All right? But if you are a founder who really believes in your plan and is able to execute on that, whatever you tell us, your standing in our eyes, it really rises. If you have reached out to angel investors or venture capital investors, you would have sometimes run into somebody who would have told you, okay, come see me after 3 months. Come see me after 6 months. Right? It's not that he's trying to tell you, bugger off, nothing's going to happen. No, they really want to see whatever you told me now, if you come and meet me after 3 months, 6 months, how much have you achieved? Right? And in my experience, most people who we ask them to come after 6 months don't come to us back again. Right? 90% of them, but we track them, by the way. Right? 90% of them don't come to us because what they told us has not happened at all. Right? 10% of them who have actually achieved better or near to what they told us will do, they definitely come and meet us. Sometimes they come and meet us even if they don't want money from us now. I love it. Right? Being honest, I love those guys. That this is a team which said, I'm going to do this and this. I said, based on our understanding, we said, okay, come after 6 months. Here walks in the team saying, listen, we don't want the money. We already got the money, but this is what we've done. What do you think now? Right? That, I think, is the beginning of a fantastic long-term relationship between the investor and the founder. Here is a team that has demonstrated to us that they can walk that talk. And for them, it is great because now they're talking to an investor who really understood the problems on their journey, told them that these are the problems, but if you can, circumvent those problems, solve for those problems, come back. And those have been some of the most interesting, successful investments for us, by the way. So team's ability to ace, that's the most important thing. And ace obviously is adapt to external environment, captivate stakeholders. Stakeholders is not only investor, by the way. The team's ability to captivate customers who are also stakeholders in that business. Team, most important for a founder is the team that they're working with, right? External vendors, suppliers, everybody who's adding to the team, right? So those are all the stakeholders you have to take care of, and obviously execute to the plan. And when we say execute to the plan, we are very clear that nobody can execute to the plan. It never happens. But how close or far you are, right? It's also happened, interestingly, I can share with you some experiences that we met a team, we discussed their plans, we said, come back in 6 months' time, 3 months' time, etc. And we discussed the business, right? As to what are the difficulties, what are the strengths they have, all of that. And this team then kept coming back to us. There are quite a few of them, by the way, and my colleague Nakul here will attest to it. Every month they'll send you the business plan update on a monthly basis. I'm sure they're not doing it only with us, they're sending it to a few other investors as well. But every month they are updating us, saying this is what was when we met, this is where we are today, month 1. Month 2, this is where we are. Month 3, this is where we are. Now the owners is suddenly on the investor. Is he keeping track? Investor ने बोल दिया 3 महीने के बाद में आना, I want to see traction. Arey, but are we even on top of that traction? Are we paying attention? Are we focusing and spending time and energy on understanding that founder's journey on those 3 months? So these are things that build very long-term good relationships between investors and founders. This is an interesting one. So every founder who ever built anything, thought that he's built the wheel. I think I still have it on my LinkedIn profile or somewhere that I want to invest in the next best thing to, what's that? I think it's still on my LinkedIn, right? Something like this. It means that, I want to meet founders who are going to make the wheel. I hope you understand that the wheel changed history for man, right? It completely changed history because of wheel. People were able to move, etc., etc. A lot of things changed. And therefore, it's like the invention that every venture capital investor or angel investor wants to invest in, because that is going to change the world, right? We meet a lot of founders, right, who come to us and tell us that we are going to change the world. I love it when I hear it, right? Because then if you are so confident, it takes a lot of guts, by the way, to come and tell me or tell anybody that I'm going to change the world. I mean, you have to really believe that. Either you do believe in yourself or you do believe the other person is completely stupid. One of the two, deep belief, right? So I love people when they come up with such crazy statements and all that. But if they are able to substantiate, right, even up to 50% of their claim, I think it's wonderful. As a venture capital investor who's investing in early stage ideas, awesome. Right? It's really great. We want to back investment ideas. We want to back founders and companies that are really going to change the world. I mean, not the entire world, but you know what I mean. I mean, for example, things that we use every day, Ola, Uber, Zomato, Swiggy, all Book My Show, all these platforms, they've changed the way we do things in life. Wouldn't any investor love to have been the first investor in them? Right? So we love founders who want to change the world and who are walking that path. But that is the beginning of the story. Now you have to also come to us and show us how you can do that. So you cannot just say, I'm going to call my invention the wheel, but no investors coming. Because your invention, your product, your service, your business has to solve a real world problem. As you can clearly see here, this is not going to solve any problem. Right? So real competitive moat to establish long-term growth runway. We discuss this very commonly, and I think because we discuss it so much, it's lost its relevance and meaning somewhere. This thing called competitive moat, differentiation. These are terms that consultants give us. We took them as God's word and we use it so liberally everywhere, right? But if you stop and think, and you really, when you say I have a competitive moat, and you really go and analyze and really try to poke holes in what you call is your competitive moat, you will get so many insights into your business, right? It will make your business really strong and powerful, right? Thing is, we don't stop to ask those questions. And when somebody else comes and asks those questions, most of the times you think just because he doesn't like what I'm doing, or just because his job is to ask me questions, he's asking me questions. We all walk around with a big ego, no? All of us, right? But I think if you yourself can be your biggest critic, if you can really punch a hole in your thesis yourself, I think your thesis, your business, whatever you're building will be far more stronger than otherwise. Yeah. So that's the other thing that venture investors like to hear. I'm sure all of you understand VCs like to hear these. Attractive funding round terms. Right? Please remember that we are investors, we are not founders. Right? I have had founders walk into our offices and tell us, please sign an NDA. I think the incidence of founders asking us to sign NDAs has gone down drastically. But till about like 7, 8, 10 years back, it was very rampant in the Indian scenario. Everybody would come and say, first sign NDA. And I would tell them exactly what I told you in the beginning of our conversation. We are Indians. We all have ideas. If you are telling me to sign one NDA, no, I am giving you 10 ideas in this meeting. Go execute. That is the real value creation is in the execution in India. Being very specific in our context, right? It's not that the idea has no value. Don't misunderstand me. Idea has a lot of value. But that value can be extracted only if you execute. You cannot come to an investor with a piece of paper or an idea in your mind and say, I have an idea, give me money. Won't happen. All right? So we've all watched Sherlock Holmes. We all know what he does, how he does. But does that make us Sherlock Holmes? Can we do it? We can't. Right? So as investors, I always share with founders that whatever you tell us, is very dear to you. Some of them may actually truly, in the true sense, be trade secrets. Because you're trying to do something which is in a different way. There is some innovation to what you're doing. Either there is innovation in the product that you're building, in some way it is different, or the service that you're offering, again, there's some differentiation factor that you're bringing to it, which is truly a different way of doing things. So it is very close to your chest, right? I understand that. It's like a secret. But when you walk into an investor's office and you have to share all of those secrets, it must cause a lot of heartburn. I get that as well. But please remember, when you share ideas with us, we are not going to steal it and build a business. If we knew how to build a business, we would have built it. We have the money as well. We wouldn't be investing in other people. And you as founders must truly understand that. You as a founder are building something. If you had the money, what will you do with that money? You'll put it in your idea, no? Or you'll give it to others. Ke nahi bhai, tu kar le pehle. Main baad mein karunga. So just knowing what founders are trying to do, how they are trying to do it, doesn't give us any advantage in building a business. Because that is not our business. That is not our core. We will not succeed. Right? We are here to help founders build their dreams, their businesses, and money for us. Right? So yeah, some of the points that we discussed in the beginning itself, large and growing opportunities, scalability, hungry team. I told you the power of the team. We are backing teams. Investable cap table. Haven't discussed that in detail, but let me tell you, this is in today's India, one of the biggest problems that ails startups is the cap table, the shareholding pattern, right? And we need to understand it's a cycle. It's going to change, but right now it's a big problem. Why is it a big problem? Right? We've done a lot of research on that as well. So I think it stems from paucity or lack of capital. Right? India remains a poor country. We are not a rich country. All right, we are a poor country. Capital is very scarce. As startup founders, who knows it better than you? It's not easy to raise capital. It's a mammoth exercise. Sometimes I feel it's far more difficult to raise capital than to build your business. Sometimes, not always, sometimes. So it's a very difficult thing to do, right? And therefore, as founders, there are many instances where you're asked to make a choice which clearly is not good for you and the company in the long run, but in the short run, you justify to yourself saying, if I don't do this, my business will anyway die. Then what is the point of thinking long term? Right? So we understand that. But because you are making those suboptimal choices to support your business in the short run, your shareholder cap table, your shareholding pattern really takes a hit. Sometimes you'll go to some angel network or some angel friends whose friends, and everybody will invest, and suddenly you'll realize there are 20 investors. Right? I've seen cap tables with 80, 100 investors as well, by the way. So 20 is a really good number. All right. But having so many investors on your shareholding cap table is a disaster. Why is it a disaster? Because later investors, the venture capital investors like us, do not like that. Right? Why we don't like it? Because now the shareholders agreement that is being discussed between the investor and the company has to be approved by all those 20, 50, 100 people. Somebody is now in the US, somebody is in Europe, somebody is gone, not traceable. Somebody is retired. Somebody says, I will not sign. Somebody says, I do not agree. Somebody says, I want that right as well. Right? So, these are all practical, real world problems. So, as a venture capital investor, we are more focused on helping founders grow their business. We want our energies to be utilized for that goal. We want the founders to get the most out of us. Right? And therefore, all these other things, if you have 50 shareholders on your cap table, is a huge distraction for everybody. It doesn't allow the founders and the investor to build the business. I have seen examples, by the way, of companies whom we wanted to invest in, but they couldn't come back to us in 3 months after getting a term sheet, saying that ये term sheet को approve करके लेके आओ. Then we'll start working on the diligence and everything else. 3 months, they still couldn't get shareholder approval. They are in existing shareholder approval. Now imagine what will happen if we put in the money and then we ask them to go take that approval. Then along with them, I'm also running here and they're taking approval. Arey approval de do sir, approval de do, investment kiya hai. Right? So difficult. So please, as founders, if you're early stage and you're planning to raise capital for the first time, or you've just about done a friends and family round and now are thinking what to do, make sure that your cap table remains clean as possible. Even if you raise money from a host of investors, ask them to come on the cap table as one entity. Right? Which means for any decision, you just need to talk to one person. That one person is representing 50 of them. वो लोग को आपस में झगड़ा करने दो. As a founder, you don't want to spend your time with that. That's not productive time. As a founder, every hour that you spend away from your business is an hour lost. Right? As a founder, you are the soul, you are the heart, you are the brain of that business. If you are working on something else, right, then this business is suffering. And cap table, as innocent as it sounds, has been one of the worst culprits. So please, let's focus on that as well. And reasonable ask. I think any investment that a venture capital investor does, or any investment that a founder takes from any investor, in your mind, I always suggest and recommend, be sure that it's a win-win situation. If you enter into a transaction with an investor, be sure that at the end of it, you think that ये win-win है, ये ठीक है. If you walk away with a feeling as a founder that ये investor तो सब कुछ ले गया, right? Or the opposite, you walk away with a feeling ये investor को कुछ भी नहीं दिया, everything is great, right? Those relationships don't really work in the long run, and I'm speaking from experience, right? Because once you exchange capital for shares, right, and the transaction is done, and one of the party is not happy, what do you think will happen from next day onwards? The investor will, if the investor is unhappy, he will, not show interest. He will not approve things. He will just become a problem without knowing. If the founder is not happy, what will happen? The founder will do that. The founder will say, "अरे तो सब तो तुम ले गए, अभी क्या है? तुम ही चला लो business." It happens, right? So I think when the time to really be very clear and sure of what you're doing in this aspect is at the time of the investment, not afterwards. So please do remember, when you're taking any investment from anybody, is it a win-win situation? Does it appear to be a win-win? Right? Very, very important. Great. I think that's about what I have. I can open it up to a few Q&A if we have the time. How much time do we have? Time is up. 10 more minutes. 10 more minutes. Happy to answer any answers, any questions that you have. And I have my colleague Nakul here. All difficult questions can be addressed. I am here for the story. Yeah.
Like out of all the things you have mentioned over here, if there is one thing to choose, like that's the only thing that you as an investor have a choice, then what would that one thing be before you make a decision to invest in a company?
Here's a smart founder. What I told, he is really imbibed. And now he's saying, why will I do the hard work of picking two? Isko hi pooch lete hain. What are the two things that I should keep in mind?
One thing,
One.
not two things.
No, I think team. If the investor is looking at something from the story that we are exchanging with each other, is the team, great team foundation, team. It is the team. And it is not about impressing upon the investor कि आपका team अच्छा है. Actually having a good team, because that is the team that's going to build the business. That's important.
Also, I have a follow-up question. Like when you are investing, do you also look at that whether this founder or this team can raise further rounds?
Oh, obviously, of course.
That because that, like, I feel is a kind of a skill set that somebody grows with time, right?
But the way we think about it is that if you can convince us, we
Then
will
you could
together
convince.
convince the bigger guy.
Okay.
No, but to be on a serious note, it's a very important point, and we always look at it. Because see, we are coming in early.
Right.
We will give you 2, 5, 10, 15, 20 crores. Not more than that. Right? I mean, on an average. But if the business grows up and business needs 100, 200, 500 crores, somebody else will have to be convinced.
Right.
So then it is not just you, it is us together who have to go and convince. Always. Yes. I can hear, but others may not be able to hear.
Hello. Yeah. When you say team, I'm assuming what you're looking from a team is execution, a team that can execute. But how do you get that feel? Is it from the passion? Is it just from the abilities in finance, the abilities in actual execution? I mean, where do you get that feel? How do you actually get that feel?
This question could be asked only by someone who has more white in their beard than me. Experience. No, I think it's a very good question. And to be honest, when somebody asks me, तुम लोग venture capital चला रहे हैं, office में करता क्या है? I get asked that question sometimes. तो तुम करते क्या हो ऑफिस में यार? फाउंडर आता है, मिलता है, उसको भगा देते हो, करते क्या हो? Right? कोई पसंद आ गया, उसको पैसा दे दिया, और क्या करते हो तुम? Most of our time goes into this. Assessing execution capability of founders. If there is one thing which, like you said for yourself, but for us, if there is one thing that defines a successful investor versus the other, it is the investor's ability to assess execution capability of the founder or the founding team. That is it. See, the good thing about India is a large market. Right? Every business that you get into has a large market. It's a luxury. I mean, I have invested in other countries in the world, and I can assure you that sitting in India, we never realized this as a strength. But any business you want to start today has a large market out there. You don't have to go find a large market. Large market hai, right? Founders, I mean, look at the entrepreneurial spirit in India. Look at this conference. Startups, founders, entrepreneurship. You can see it here live, right? So we have X and we have Y. What is missing is that link. That link is the execution capability. Can this founding team really execute and build a big business in that market? Execution capability. It is all about execution capability. So what we do in our office is most of the time, let's say 80% of our time goes into understanding business models and founders who can execute them. Extremely important. Yes.
So I have one question. You talk about exit plan. So as exit plan,
Exit plan.
as an investor, what are you looking for from a new company for a startup? How many fold you are looking for to exit?
The moon.
Like it's a 3 years, 5 years. What is your take?
100,000 million times. Hey, why are you putting a cap on my returns? See, I'll tell you, the honest answer is as much as is possible in that business model. Every business model is different. Every sector is different. And you as an investor have to understand that every sector will have different return potential. Potentially कम है ना वो sector में या उसमें बहुत ज़्यादा है by its very nature, right? So what we do is we don't ascribe a thumb rule saying सब में इतना ही return आना चाहिए. Right? We are building a diversified portfolio. So at Equanimity, we do not, focus on any sectors. We actually invest across sectors. In our current fund, the second fund, we made 6 investments. Each of those investments, by the way, is from a different sector. एक dating app है, एक defense company है. I call them love and war together in the portfolio. Of the 6, right? So very, very different companies. So when you're talking of my expectation from businesses, it varies from sector to sector. But if you really want on an average kitna hona chahiye, right? I think as a fund, if you are able to do 50% IRRs, it's fantastic. We'll be very happy with that. And in the early stage, when you're investing in smaller businesses, it's very possible, right? What it means is a 1 crore business has to become a 4 crore business in 2 years. Very doable, no?
Thank you.
Yeah. Now, okay, we have a question there, yes.
Let's assume 2 founders from a company came to meet you. One is vibrant and he could answer all your questions and all. And the other one couldn't answer much. So will you be expecting equal potential from both the founders, or will you go with that other founder?
Sorry, give me an example. 2 founders.
From the same company. Let's say,
Same company, co-founders.
Yeah, co-founders.
You and me, we start a business now.
Yeah, we went to a venture capitalist.
Yeah.
So he's asking questions. One of us is able to answer everything, and the person has a clear idea, but the other one cannot answer.
It's a difficult question. I'm going to get Nakul to answer if you don't mind. 2 co-founders. One can give every answer, second doesn't give any answer. What do you do?
So it happens. It happens that not all co-founders may be good orators, may be good with meetings, but every co-founder gets a certain skill set in the team. So a CEO, a CTO, a COO. So there are different skills that everyone gets on the table, right? So it's not necessary that a co-founder needs to be eloquent in terms of answering the questions of a VC. He or she needs to play their role in the team. And if they do that, they have the seat on the table. That's what a VC looks for when they're looking at the entire team. It's not just these softer aspects, it's also the hard aspects in terms of how you're contributing to the business building.
Thank you.
Sorry, I'm going to add to this because this reminded me of a business plan we were evaluating in Kerala, right? It was a company that was doing money transfers. This is a few years back. Pretty awesome team, right? I mean, the tech, the platform, everything good. One founder could convey everything. The other founder would come on the call and not speak, right? So we were scratching our heads कि ये बात क्यों नहीं करता है? So then, after 2 meetings, we actually asked them, why? बोले नहीं वो English नहीं बोलता है, वो खाली local language बोलता है. He is only Malayalam. And then we got, by the way, we didn't leave it there. We got a Malayalam venture partner from our firm to talk to him. That guy was fucking fabulous technology. He's like really crack. He said, oh, the guy is very good. So if we would have just let it pass based on just that one meeting, we would have missed it. So to your answer, to your question, I think it's like Nakul rightly said, every founder brings something specific to the table. See, it's also a bad reflection on you if your founder is not really bringing anything. Forget about our understanding, right? So he's bringing something. Now it is our job to uncover what is he bringing that you have him as a co-founder.
Yeah, so I have a follow-up question to the question the sir here asked. No, it's about the question previously. Yeah. So it's about exit strategy, okay?
Yeah.
Let's say the market, the TAM is quite big, right? And the business can go on the roof, about the roof, right? And we are in a very early stage. So you're asking about the exit strategy in a very seed round investment. So what should be the founder's answer? So it can be like the founder would have identified an exit maybe in another 3 years. But in another 5 years, the business has the possibility to go it above the roof. So should the founder say that I can get this exit after 3 years, or should I aim for the exit which is an IPO after 5 years or 6 years? So what should be the answer?
A fair question, fair question. See, let's take a step back here. As a VC investor, my investment horizon is a fixed time horizon. So we run fixed tenured funds. So therefore, our time horizon of investment are anywhere between 4 to 5 years, typically. You are building a business which is going to be a going concern, which is going to be lasting maybe after you as well. That's the passion and that's the aim that you are building with. But I, as a financial investor, need to exit the business within that 4 to 5 year time frame. So when you look at exit strategies, you don't look at exit strategy for the business. You look at exit strategy for that particular investor who is investing at a particular stage in your business. So if I'm a seed investor, I would want to exit after say 2, 3, 4 rounds of follow-on investments that you've raised in the fund, in the business. So that's how you have to look at it. How would I provide an exit to a particular investor who's entering at a particular point in time after that 4 to 5 year time horizon that he or she wants to hold the stock in the business for? But I will keep building. As a founder, I will keep building and I will take it to IPO and beyond. That's how you have to think about it.
Thank you.
See, to be fair, I told you exit is our problem. It's not the founder's problem. It's the investor's problem, right? But why we love to hear about it, that in your story we would love to hear about it, because now you're thinking about my problem. Whether you have a solution or not is not the question. Just that you thought about my problem is great. So all you have to do as a founder is build. Right? If we are convinced about your building, no, we will figure our exit. That is our problem. As long as you build.
Yeah, one
Yes.
last question. So how important is a co-founder in a startup? So there are companies where there are solo founders who starts off with the founding team, and co-founders may join on the journey. Otherwise, it turns out to be a solo founder company, right? So how important is it for a VC to evaluate a startup?
Yeah, it's a very relevant question and it keeps coming over and over again. So there is no right or wrong to it, right? There are all kinds of investors out there. There are quite a few number of investors who want a co-founder. It's a requirement for quite a few number of investors. But there are equal number of investors for whom it is not a requirement. It is good to have. Otherwise, as a solo founder, if you're able to manage everything and build a team that can manage everything, it's great. Dhirubhai Ambani akela tha na? So at Equanimity, we don't have any such policies, right? But yeah, if you're a solo founder, we want to make sure that you can really manage and grow the business by yourself. You have all those capabilities, or you hired the right kind of people, given them ESOPs, bound them, have their loyalty, and they're really willing to walk the talk with you for the next 5 years. That you have to convince us.
Yeah. You said that you cannot expect investment on an idea. Okay. So my question is, are there exceptions? Is there any situations in which, or have you ever done such a thing?
I have never done that. In my investment thesis, there is no exception. But in the ecosystem, there are exceptions. There are so many stories. अरे मैं आपको मिला, मेरे को पसंद आ गया, मैंने पैसा दे दिया. मैं तो सोचता हूँ मैं ऐसे लोगों को क्यों नहीं मिलता हूँ. मैं पसंद आ जाऊँ, मेरे को पैसा दे दो. नहीं होता है. No, there are exceptions. There are all kinds of investors. I think it's very prevalent in the US, even Europe. Some markets in Europe, in Korea, right? This is very prevalent, but not anywhere else, right? It's a function of culture, right? And why I say culture is, I said in the beginning, in India, all of us have 10 ideas. So how can you fund an idea? It's my mind. It's my mind block. Right? I'm sure there's a way around it. I haven't figured it out, because if somebody asks me for ideas, I can give you 10. Now only thing I have to figure out before getting into the investor's office is isko kaun sa idea isko pasand aayega. Because my idea now is just to get the money, not to execute that plan. So I fear that, and therefore we don't fund ideas. We fund very early stage businesses. You or a co-founder together done something. We actually did. He's invested in a company which was technology पे पूरा नहीं बना था. They didn't have the entire tech in place. They didn't have any team. They had 4 people working from their houses. No office, no nothing, right? But he funded them because the idea is sound. The market is, the TAM is pretty large. This was a dating company, by the way. Dating in India is huge. Look at the population pyramid.
Yeah, I think that is the nearest to what,
Yeah.
to what thing, to investing in idea. This is almost similar.
Yeah, but if they would have walked into our office saying nothing, I have an idea. I would say like Martin Luther King, I have a dream. You know? All right, thanks everybody. This has been really, a good conversation, good questions, I must say. This side started very well with all the questions and answers. Then you guys took over. All right, thanks everybody. Thanks.
Thank you so much for your wonderful words. Just a token of gratitude from KSM side. I will give. Thank you, sir. Thank you so much for your valuable time. Yeah. One second now. There.
Thank you. Thanks. Yeah. Nice to meet you. We'll meet you in Florida.